Good morning, it's Tuesday the 7th of December. I'm Tom Elliott and here's my market report. The share market's surprisingly strong this morning, and I say surprisingly because the Dow Jones was weaker last night. Shares fell in America because of some rather equivocal comments made by the head of the Federal Reserve, Ben Bernanke, about the future of the US economy and of course the future of US interest rates. Now locally the Reserve Bank is meeting today. The expectation is of course that interest rates will probably stay on hold after both the increase last month and the fact that the big four banks not only met that increase but actually in the Commonwealth Bank's case exceeded it by another 20 basis points. Since that time we've had enough data coming out about a slowdown in both inflation and economic growth in Australia that would suggest there's no need for the RBA to increase interest rates, I would have thought, until at least March. Quite a lot of corporate activity dominating trade on the ASX this morning. Now there's a big rumour doing the rounds that mining giant Rio Tinto is going to launch a takeover bid for East African coal company Riversdale Mining, which is listed in Australia. Now the rumoured price is $15 a share. Well, the stock has already shot up to around $16.30 a share. Some people say that Rio may have to bid as high as $20 in order to secure control of that company. And as an aside, it is interesting to see that notwithstanding all the talk of greenhouse gas emissions and everything else, coal stocks, both here and overseas, continue to perform extremely well. The Fairfax CEO, Brian McCarthy, shocked the market yesterday. He resigned. From what I hear, the company is in a little bit of disarray, and of course, as many of you would know, I do some work for Fairfax in the radio division. A lot of conflict over what's the best direction forward for online versus print newspapers, and of course the real issue is the future of the Age and the Sydney Morning Herald. Like newspapers in the US and the UK, whose print editions are really suffering, things are no different at Fairfax, and I think over the next year the company has to make a serious decision about whether it can keep supporting, especially in the Age's case, a newspaper that, to be honest, might start losing money fairly soon. Remember, this is a company, or at least a newspaper, whose classifieds used to be known as the Rivers of Gold as recently as the late 1990s. How things have changed. Speaking of Fairfax, there's talk that its radio assets, 3AW in Melbourne, Magic in Melbourne, and of course 2UE in Sydney, could be up for sale, and the obvious buyer would be Macquarie Radio Network, which runs 2GB in Sydney and MTR in Melbourne. So we'll see if that happens. I suspect the two companies would still be a fair way apart on issues like price and value. Sigma Pharmaceuticals is in the wars. Now this company recently sold its pharmaceutical manufacturing division to an overseas group for about $900 million. And they're going to apparently make a big return to shareholders fairly soon. But the problem is their remaining wholesaling business has just lost Pfizer, which is one of the world's largest drug groups, as a major customer. Sigma shares were at 48 cents before this announcement yesterday. This morning they're as low as 39 cents. Australian Pharmaceutical Industries, another wholesaler in the pharmaceutical space, also seen its shares drop a bit. Perhaps the wider implication is that companies that operate a wholesale or distribution model of business could find that their entire business models are seriously under threat here. As we're seeing with retailers, customers are shopping online, retailers, old-fashioned retailers, having an encounter by trying to get people to go to the internet for their sites. And for wholesalers, you have to question these days, is there any real need for an interposed entity between a producer of something and the seller of something? Where this leaves Sigma Pharmaceuticals is hard to say, but the market is certainly having its say, and most analysts this morning have downgraded the stock. And finally, the price of oil has been climbing quite dramatically on world markets. It touched $90 a barrel overnight. As usual, this has been blamed on one of two things. If oil prices go up during the northern winter, which has started, and like the last couple of years is very cold, they say it's because of heating demand, that is demand for heating oil, which is used in the US and Canada as the main source of heating fuel. And if the price of oil goes up in summer, they say it's because of the US driving season. Well, it's undoubtedly the heating season at the moment. Petrol prices here, I reckon, will go from $1.30 to $1.35 a litre, right up to over $1.40 in the next week.